Welcome to readtheticker.com. Today we're going to analyse Richard Wyckoff logic on the SSEC, or the Chinese Stock Index. Here we have the SSEC index mapped out with Richard Wyckoff phases. Here we have our training range. A much wider range here. Had our sign of strength in the green zone. We had some supply coming into at the resistance. Last point of supply here. It failed to hold back. We had a breakout here to new territory. Very strong market up to here. Preliminary supply. This is the first bit of supply coming in. And then we had the very powerful buying climax, as you can see by the volume down below. So here we have, between this zone and that zone, demand was in pure control. Between here and here, supply has overcome demand. Selling started aggressively, and eventually selling has overcome demand. What normally happens after a buying climax is that people realise that the supply is coming into the market and prices are forced back. So the Wyckoff logic calls this an automatic move, an AR. The buying climax and the automatic move, wherever it settles, it may not be over yet, creates the range for the next phase of the market. So we have a high and low, and this is the trading range as expected, probably I would suggest over the next weeks and months. As you can see on the green on the waves up, very powerful waves. The volume starting to taper off. That's a good sign that the rally was about to subside, because the buying pressure was coming off. If you also notice how light the selling pressure is. That is, yes, it is heavier volume, but it's relative to the demand. It's not crazy heavy volume, so I would hold. I would say there's large odds for a bounce back up to at least 4,800, if not higher, go all the way higher. So there is going to be coming a bounce. It may take some time. It may take a few months. I expect a base to form here. So we are just following this pattern here. We've had our buying climax, a preliminary supply, a markup, about an automatic move. Now we have our trading range laid out. We'll wait to see how the Chinese SSEC index maps out. Of course, if the if the sell-off has yet to stop, we will find out in the next week or so. As you can see, the point and figure chart from this accumulation pattern between here that I've mapped out with the point and figure forecasting tool. This is the accumulation zone where the price action tightened up, and buyers had, the bullish people had plenty of time to accumulate stock. So a target was always forecast to be around here, and as you can see, it did overshoot. But we are ready. First bit of supply came in this point here. Second point of supply. So I suspect we're going to get a little bit more consolidation at this high level once the first panic subsides. As you can see down here, very strong volume bars up on the upswing, on the waves up, and a light light downswing bar. even though the sorry, let's scroll back up here. The fact that it's fallen from 5,200 all the way down to 3,800, and people have called that a crash in many blogs. Well, it's only what you expect when it's gone from 2,000 to 5,200. It's only retraced not even 50%. If I just do a little tracement tool, as you can see, 50% is actually 3.6, and 38% is around 4,000. So yes, it would seem rather a large move, and some might call it a crash compared to the majority of the movement. But in line of this rally up, it's just an emotional sell-off from a buying climax, an automatic move, pretty much to scare the public. And I can bet you at bottom dollar the people who've accumulated down here have unloaded up at these little points here. They've unloaded at this last point of resistance. They've unloaded at point of supply, and I think they can probably take an opportunity to start accumulating in this zone here. So I would watch the market very carefully. I would consider going long. Of course, all are subject to what happens in Greece, but I do believe that the Chinese government are going to probably do a lot more to keep the index a little bit higher. So give it a week or two. Bear in mind that it'll take some time for the paddock selling to subside, and once the supply dries up, you get a couple of light red bars down in the volume on a weekly level, then you know the supply has dried up, and it's most likely that it's going to go higher. This chart here, you see in the logic we follow through, we go through in the RTTWC blog and say every day, or every week, talking about what the Wyckoff logic is of a particular chart. The RTTWC blog, which is the RTT Wyckoff campaign blog, is within the RTT Plus service, and you can learn all about that by the main menu, services. Within the RTTWC blog, we have our Wyckoff logic and spread volume analysis boxes to help you analyze when there's more supply or more demand coming in. For example, here with the buying climax, above average volume is indicative of new supply from the strong hands overcoming demand from the weak hands. And we talk about how the wide spread, moderate spread, narrow spread relative to the volume, and how it affects your trend. Thanks very much for watching.